What's up guys, so welcome back to the channel. So today I thought I'd go through and do a sort of different type of video. So I'm going to actually be back testing for around 20 minutes and I'm just going to film the process and also just explain my thoughts behind each one of the trades that I'm taking. So it will also be in a way as well a full breakdown of my strategy and what I'm actually testing at the moment. So I hope you guys find this video useful. So let's get into it. Okay guys, so recently I have been using this backtesting software called FX Replay, which I'll show you in a minute, but it's like TradingView, but it actually lets you place the positions and you can't go back once you've already played price. So like on TradingView bar replay, where you can maybe fast forward price and then enter a trade and go back if it doesn't work out and enter in a different place and sort of cheat. You can't do that with this version because, as I said, it doesn't let you go back in time. So if I show you what I mean. So when you open it up, it comes to this screen here. As you can see, I've already done some different backtesting sessions. And basically you just create a session on the pair and also what sort of strategy you want to test. I haven't actually created any strategies on here yet because they're all basically the same. So you could say, like, if you're testing trades on a Monday, you could test that here. And then you can also go over to here and you have your analytics all calculated for you. So it tells you your win rate, P&L, average risk to reward, anything you want to know basically about your strategy. Also like the profit per day. So this is a very useful tool if you guys want to level up your backtesting and actually improve the accuracy of your statistics about your strategy rather than just using bar replay on TradingView, which is completely fine, but I find that this just works a lot better and it also saves you time going through calculating any of the statistics. So if we go ahead now and create a new session, we will do 100k as the current balance. And for this, I wanted to go through a few examples on gold. And also what's better about this than TradingView, it lets you go back way further in time, like all the way back to 20, even further back than that. So I think the earliest is like 2010, but from 2010, you can also go down to like the 5-minute time frame. Whereas on TradingView, it sort of stops at sort of the beginning of 2022, and then you can't no longer go down to the 5-minute time frame, which is annoying. So if we just choose a random month, say August, we'll go for the 1st, and then the end date can just be the 21st. And then this here would be when you create your strategy. So say for this, we're going to do, let's just name it gold. Obviously, you can put whatever you want there. Then we click play. And as you can see, it's basically identical to TradingView. So everything that you would see on TradingView is in here. And yeah, let's go through a few examples of what I'd be looking for if I was gonna take a trade. So starting off on the daily, what we can see is that at this point in time, price was overall bearish on the daily time frame. So what we did, we kind of came to this area of imbalance here. We filled it, and then we started breaking past all of the areas of demand on the daily time frame, showing a very bearish price action with this impulsive move. And what I can also see, we do have these equal lows down here. So for any trade that we're going to take, this would be our target. I'll just write liquidity target down here. So this would be any target that we'd want. And now we look on the lower time frames for our entries. So going to the 4-hour, what we can see is that prices come into this whole imbalanced area. We took out these early sellers, and then after we did that, price started to move over to the downside. We did break past this area of demand. Price came back, almost retested this area of supply, slightly missed it, and then we continued down. And at the moment, we've sort of formed this area of support here, which if you can see all of these wicks building up, that would just be an area of liquidity for me. What I also noticed is that price has reacted from this area of supply very nicely. You know, we came into it, didn't wick above it, we stayed within that range, and then price has given us a very nice push from that level. Going down again onto the 1H, what we can see, we have this area of demand has failed, showing that price maybe wants to continue down from this level, and the sellers are definitely present. So I would mark this on as a change of character. And then we identify the last inefficient range. So up here, you can see all of this price action is efficient. We had this push down, price came back up, filled it, and then we have this further push down. This one here is inefficient, and it comes from this area of supply. So for me, this would be a very good entry point. I'm just going to go down to the lower time frame, see if we can refine it. We might want to include this bit as well. And what we would do now, we would just set a limit on this area. So a good thing about this tool as well, I'll show you in a minute. We'll look for take profit first. So I think we can set this up as a swing position because we have basically predicted the lower high point. So we are expecting now a lower low to be formed. And we also have all of this liquidity down here. That's a 1 to 22, so I wouldn't personally target all the way to there. What I'd want to do would be target this low, which is sort of this internal daily low within this internal trend. So that would be our target. And then what we can do, we can actually click on the risk to reward tool, go up here, and it places the order and it fills in all of the numbers for us. So the entry, stop loss, take profit, and we can also choose how much to risk. I always do 1%, so we'll keep it at 1%. And then we just place the order. As you can see, we've got the sell limit set. And now we just see if we get tagged in. Price came very close. And there we go, that would have been a stop loss, and that's fine. But what we can notice as well, even though that was a stop loss, price did still come back into this area, wicked into it, and then we have this very, very impulsive move back to the downside. So I'm still expecting this trade to continue bearish. So if we play price a little bit first, go down to the lower time frame, see what other entries we can get. Notice at the moment, this whole area was that 2-hour order block that we had. So this one here. So if price is going to continue bearish, I wouldn't expect price to come above this area here, which as you see on the 30-minute, we are respecting very nicely. But for me to actually enter this trade, I would want to see a new low formed. So we'll see if price can break this level and label that as a break of structure. And wait and see what price does. There we go, price maintained that line. And we did get that break of structure. And what we can notice now, we do have this very nice level of supply just here, which created that very impulsive move and a big area of imbalance. So this would be a very high probability level to take a trade from, in my opinion. Stop loss just above the wick. And again, we'll go to the daily and we target the daily low down here. Going back to the 1 hour. Place the order. There we go, trade tagged in. Now we just let it play out and also look to see if we can get any scale-ins. Okay, the low is broken now. At this point, I probably wouldn't make the trade break even, because notice how we only slightly touched the area of supply. That could just be inducement and price may want to come and touch it a second time. Or not, price may want to just melt. See if it reaches our target. There we go, the target was absolutely smashed. And it also did come to our daily target, which was the liquidity down at the bottom here. Also notice now we have this updated account balance. We have $13,000 in profit, so 13%. Very nice trade that. And again, notice that we had these equal lows. Price has now swept them and had this very impulsive reaction. So we may think now about buys if the lower time frames give us some. Just deleting all of this. There we go. So going down to the 1H. As you can see, once these equal lows were liquidated, price had this very, very impulsive move. On the 15, you can see we have all of these huge imbalance areas to fill as well. On the 30-minute, this area here is not an area I'd look to sell from, because it just looks like an area of liquidity to me. We do have this sort of retail trend line. So areas that I would look to target if we were going long. I would actually look for price now to come up and take out this high. Just based on experience and how it looks, we have taken out this sell side liquidity. Price has given us that impulsive move, and there aren't really any unmitigated inefficient regions for price to react from. And we do also have these triple top areas of liquidity above, so we can look for a very nice position to take out those highs. So looking at this, going on the 5-minute, we can see that a new trend has sort of been formed internally within this imbalance. So if we play price a little bit, not really seeing anything at the moment. All right, so now what we have, this would be my aggressive entry model, where I don't wait for a confirmation and I just enter based on a risk, based on a limit. So we have this build up of liquidity happening. Prices sort of formed this higher low here. So most traders would probably be buying at this level on the retest of the most recent higher low. But what I can see is that we have this inefficient area just immediately below, and it is a very clear area of demand just below the liquidity. So for this particular strategy that I have, I would simply set a limit on that level, stop loss just below. I always allow gold a little bit of room, so I don't just set the stop loss at the wick. I would have it a little bit below, just due to gold's like inclination to wick people out a lot. And then we go on to the higher time frames for our targets. And my target for this position, even though I don't think this level will hold, we have this area of supply up here. So just to be safe and take our profits, we would target this level. Still very nice risk to reward. But as I said, overall, I see price coming up to these highs. So we could potentially look for a re-entry anyway if this initial position hits the take profit. So all we do now is go back and set the order. You have to go back onto this and then place the order. There we go. So see what price wants to do. All right, so tagged in. This is the point where in a live situation, I'd be paying close attention to what price is actually doing. All right, so notice now we've had this internal breaker structure. This on the 5-minute or the lower time frames would be the significant lower high point, and price has broken past that, showing us that price is likely to continue higher. So after that, I'd probably just let the trade run, have an alert at the stop loss and take profit. And if price breaks this high, I would be looking at potential scale-ins. Oh, price looks like it's going to hit SL. Or not. That was very close. Not really seeing any scale-ins, so I'm just going to let it run. There we go, TP hit. That was a lovely trade. So get rid of this and move on to the next setup. So for the next setup, I want to definitely see this area of supply get broken before looking for further buys. As you see, we sort of had a reaction from it. For sells, I'd want to see this area broken. So even though we had this breaker structure here, I would just say that's a liquidity grab at the moment. There we go, so buyers are still in control. We're only looking at buys still. So now we've had on the 4H a further breaker structure in this level here. So if I was looking at buys, the range that I'd be looking at would be from, get this tool up, from this low to this high, and any lower then I would consider sells. And the only level that I'm seeing at the moment for buys would be this 4-hour extreme level of demand here. So if price can get back to there, we could look to enter a buy position again. I'd also be paying attention to this level here. If that holds, we could look to take a buy in that area as well. If price wants to pull back, it might not. There we go. So our 4-hour level was tapped. At the moment though, this sort of looks like inducement because we have barely tapped it. So I'd wait for price to come a little bit lower first. And see what it does. There we go. And at this point, I'd be on the lower time frames and I'd be looking at potential entries if we start breaking structure. Okay, so what I can see at the moment, we had generated these equal lows just immediately above the demand, and these were taken out. Once these were taken out, price had this very impulsive buyers move to the upside, and we did also break past this most recent lower high. So we can have a change of character or breaker structure, whatever you want to call it. And the level that I'd be interested in for buys would be this area of demand. I wouldn't enter on this one because it looks like just inducement, since we do have inefficiency below it at this level of demand. And I'd probably at this point simply set a limit. On 30-minute, you can see that we sort of have this whole range. Notice as well, this area of supply immediately above the lower high did also fell. For valid changes of character, I always look at if there is an area of supply like this, which is inefficient above the lower high, I want to see that failed as well. Otherwise, the break of structure here may just be a liquidity grab for further sells. So since that has failed and we wicked above it, which means on the lower time frames we also closed above it, I'll just set a limit at our extreme level of demand here. Stops just below. And for this, we're going to target, we could have that as our first target. But overall, remember I said that I see price liquidating these highs. So that would be our second target. If price does start to reject this level, then I would get out of the trade. and it would still be a 1 to 3, so that is valid as per my risk management rules. So setting the order. See if we get tagged in or not. There we go. And this level has been broken above. Notice, however, we didn't immediately pull back to the level. We had this pullback which slightly missed. When you see this happen, it's normally just liquidity being built above your zone, which is fine. It still means that their level is valid, and I would still keep the limit until price either breaks structure to the downside or continues up and just leaves without us. So yeah, we'll see if the take profit can be hit. We have the further higher time frame breaker structure now, so marking that on. Price may want to come back down and retest this area, but hopefully it can hit the take profit before it does that. And see what it wants to do. If we go on the 4 hour, it might be a bit quicker. And there we go, the take profit was hit. Notice how price also wicked into this demand. I didn't really see an entry in that level though, so I wouldn't have taken the trade. But yeah, I think this video is going to be quite long anyway, so I'll end the video here, and I hope you guys found this video useful. This is just how I personally backtest my forex strategies using this new software called FX Replay. If you guys want to buy it, I'm not affiliated with them in any way, but the subscription is, I think, $35 per month, or you can pay for it for a year, which ends up being, I think, slightly cheaper at $300 a month. I'm not sure if that's correct, but it's around those numbers. But it is definitely a lot better than TradingView bar replay, because as I said, you can't cheat, and you also have the added benefit that it goes and calculates your statistics for you. So on this one we had 75% win rate. This was our average risk to reward because we had those 3 very high risk to reward ratio trades, and all of these other statistics that you can analyze if you want. But yeah, I'll catch you guys in the next video. Make sure you like, subscribe, and if you want to copy all of the trades that I take, I'll leave a link to that in the description. It's completely free. And also, if you want to learn my